All commercial banks, including regional rural banks, small finance banks and local area banks, cooperative banks, all India financial institutions and NBFCs, including housing finance companies and microfinance institutions, that is all lending institutions basically in the system, are being permitted to allow a 3-month moratorium. I repeat, all the lending institutions are being permitted to allow a moratorium of 3 months on payment of installments in respect of all term loans outstanding as on 1st March 2020. The second measure under this relates to deferment of interest on working capital facilities. In respect of working capital facilities sanctioned in the form of cash credit, overdraft, lending institutions are being permitted to allow a deferment of 3 months on payment of interest in respect of all such facilities outstanding as on 1st March 2020. The accumulated interest for the period will be paid after the expiry of the deferment period. The moratorium on term loans and the deferring of interest payments on working capital will not result in asset classification downgrade. The next announcement relates to easing of working capital financing to reduce the policy repo rate by 75 basis points to 4.4%. I repeat, the rate cut decision is 75 basis points, and accordingly the repo rate stands reduced from 5.15% to 4.4%. Simultaneously, the fixed rate reverse repo rate, which sets the floor of the liquidity adjustment facility, that is the LAF corridor, was reduced by 90 basis points. I repeat, 90 basis points to 4%, thus creating an asymmetrical corridor. The purpose of this measure relating to reverse repo is to make it relatively unattractive for banks to passively deposit funds with the Reserve Bank and instead to use these funds for on-lending to the productive sectors of the economy. It may be recalled that during the month of March so far, the banks have been parking close to rupees 3 lakh crore on a daily average basis under the reverse repo, even as the growth of bank credit has been steadily slowing down. India has locked down economic activity and financial markets are under severe stress. Finance is the lifeline of the economy. Keeping it flowing is the paramount objective of the Reserve Bank of India at this point of time. The time has therefore now come for the Reserve Bank to unleash an array of instruments from its arsenal to staunch and mitigate the impact of COVID-19, revive growth and above all preserve financial stability. The aggregate action and stance of MPC provides a befitting launching pad. In turn, the configuration of initiatives unveiled in the statement on development and regulatory policies, which I am now going to spell out, amplify the MPC's decision and leverages on it as well. Accordingly, it is appropriate that the MPC's decision and the other actions which I am now going to elaborate upon should be regarded as a comprehensive